Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm excited to welcome you to yet another promising edition on the Forex Morning Mastery, your daily dose of financial insight and trading strategy. Unfortunately, yesterday we were not able to hold our session as we normally do, and in fact, we were already live, but due to some couple of technical reasons which was beyond our control, we were not able to sort things out, and unfortunately, we were not able to hold on to that session. But I was able to do follow-up details on the asset we've been monitoring since the beginning of the week, and of course for those of you who are with me on both my trading view and telegram platform, you definitely must have gotten an update as regards to how we will be managing the positions yesterday. And thank goodness we are back live, and I'm very glad that things were quite okay. We were able to sort out all the issues we had yesterday, and here we are today. So I'm so excited to be with you once again as we will be delving into the financial market from both technical and fundamental perspective using our basic tools such as the trend lines, key levels, chart patterns, and of course our economic calendar to strategically position ourselves for the next move. So in fact, I have quite some interesting trading setup we have today to guide our trading decisions, so you do not want to miss out on the ideas we will be deliberating on through the course of the session. So grab your favorite beverages, biscuits, whatever you, and let's get prepared for the session. Now, before I go into the details, please, I like to sort out one particular issue, personal issue right now. So you will give me about a minute or so, and I will be back with you in a moment. So thank you very much as you stay tuned in. All right, so I'm sorry for the break, and I'm glad we are back right now. Got things sorted out so that we can have no disturbance here. So once again, I welcome you all to yet another promising edition on the Forex Morning Mastery, your daily dose of financial insights and trading strategies. And like I was saying earlier, we have very insightful trading setups that we will be using to strategically position ourselves for today. And I encourage you to stay tuned in so you don't miss out on the valuable ideas we will be talking about. In the last 3-4 days now, we have been monitoring three financial assets which we have on our watch list, including the USOILSPOT, the GBP USD, and of course the XAUUSD. And on all of these assets, we've done fairly well across board. The US All Spot obviously is one of the most profitable assets on our watch list for this week. The JP USD gained some little bit of traction yesterday, giving us some amount of profit on that one too. And the same thing also happened to the XAUUSD. So today we are going to be reviewing all of this. And most importantly, we are going to be taking into consideration the fact that today happens to be the last trading day of the month, which usually has this psychological expectations that market participants may want to be rounding off their portfolios for the month of February in preparation for the new month. And this usually results in some reversal situation where price action moves in the opposite direction of the prior leading price action. So we are going to be taking this into consideration as well. Then we also, based on the asset we're monitoring, we have majorly it's about the US dollar, and in fact I have some interesting development that I would like to share with you this morning, which will be influencing the way the market participant will be reacting to the US dollar especially. So I will be sharing that with you in a moment. So with that being said here, I didn't forget you guys, my newcomers in the house, those who are joining us for the first time. You are highly welcome on board, and I'm very, very excited to have you around with us this morning. And I know you will be wondering what this is all about. What is it that we do during the Forex Morning Mastery? Well, the Forex Morning Mastery was born out of a necessity to do follow-up details on my weekend videos, which I usually share on this platform, where we look at how my plans or my thought process are ahead of the new week. So during the Forex Morning Mastery, we come here to do follow-up details as technical traders, monitor price action, review our current trading positions in preparation of both the London and the New York session. So this session officially kickstarts about 8:05 a.m. UTC and 9:05 a.m. West African time. And my aim here is to equip you with the knowledge and skills necessary for you to make independent trading decisions. And of course, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that being said here, we will be diving right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the market sentiments today. Hold on a second, let me sort this out here. I'm trying to open up my economic calendar. Give me a moment, please. All right, so okay, so we all know how important it is for us to keep tabs with the fundamental factors, as these factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we have been monitoring since the beginning of the week, we have been focusing on high impactful economic features from both the United States and the United Kingdom. Though the first half of the week did not have any high impactful events, so we included the mid-tier economic features so that we can have a broader view into what majority in the market will be looking forward to. And in fact, we have quite some interesting development in the financial landscape, especially from the United States, which I would love that we review before we go into the technical details for today. And I think I have the slide somewhere here. Let me look for it. And okay, so I'm trying to look for the slide where I had the summary of what has happened so far this week based on the fundamentals. Okay. So unfortunately, I can't find my slides right now. I prepared it yesterday with the hopes that I will share with you guys this morning, but I can read it from where I jotted it down on my notepad here. So we had some couple of speeches through the course of the week, and we do know how important these speeches are as they give us an insight into the monetary policy outlook of the Federal Reserve, and of course the health situation of the economy, and of course the interest rate projection for the year. And we all know how important this interest rate, of course the easing cycle of all of the central banks of the major economies are, as this has been ongoing for over 2 to 3 months now, most especially the United States, where we have been expecting that there's likely going to be a Fed rate cut as early as the month of March. But unfortunately, we saw how sticky the inflationary pressure in the United States is. Last week, we saw how high the CPI data came in, giving us, bringing in the idea that interest rate will not be cut anytime soon. And of course, this was further buttressed by the Fed chairman during the FOMC press conference a couple of weeks ago. Now, during the course of this week, we had speeches from Boston's Fed President Susan Collins. We also had the New York Fed President John Williams, and then we also have the Federal Reserve Governor Michelle Bowman speeches today. So I'll just quickly give you a quick recap of what they said and how this is going to be affecting the market dynamics. So here, sorry I couldn't get my slide, but I'll just read through what she said. Now, the Boston Fed President Susan Collins said here that, using her own words, "I believe it will likely become appropriate to begin easing policy later this year." So later this year, not as early as expected anymore. Now, she went on to further add that when this happens, a methodical forward-looking approach to reducing rates gradually should provide the necessary flexibility to manage risk while promoting stable prices and maximum employment. Now, from the New York Fed President John Williams, he stated that while the economy has come a long way towards achieving better balance and reaching our 2% inflation goal, we are not yet there. So that is a very emphatic statement there. And Williams added that he will need to assess the data, the economic outlook, and the risk in evaluating the appropriate path for monetary policy that best achieves our goals. Now, on Tuesday, the Federal Reserve Governor Michelle Bowman said that she is in no rush to cut rates, given upside risk to inflation that could stall progress or cause a resurgence in price pressure. And she went on to further say that inflation will decline slowly, adding that she would remain cautious in her approach to considering future changes in the stance of policies. So, from all the speeches we have here, the major highlight we can take home is the fact that inflation is still sticky in the United States, and as a result of this, inflation rate will definitely going to be remaining higher for an extended period of time. And of course, when inflation rates remains higher, this becomes an attractive window for investors to put their capital in the US dollar due to the differential yield in return on that asset. So this obviously is a very hawkish remark, hawkish review and outlook to the United States. So we should definitely, based on this data, expect the dollar to rise before the week ends. Now, in addition to this, yesterday we saw the gross domestic product annualized for Q4, which was reported at 3.2%, which was slightly below the expected and estimated figure of 3.3%. In fact, the previous quarter was also a 3.3% expansion, and then the last quarter fell by 3.2%. Though there has been an expansion, but it wasn't as high as expected. It still shows that the US economy is still resilient. Then the US durable goods order yesterday came in below expectations at minus 6.1%, which is not that impressive at all. And the housing price index rose by 6.1%. And of course, we know how the housing sector is sensitive to the US economy. The better the housing sector does, the more buoyant the US economy seems. And then so far in the last 24 hours, we saw how the US dollar index rose significantly. The DXY is considered to be an asset which we usually use to gauge the six major currencies against the US dollar, and it has been doing very well. So everything from this point of view is suggesting that the US dollar is supposed to rise going forward. And we have interest rate speculators have priced out the federal rate cut in March and May. And at this point, everyone is looking at a potential interest rate cut in the month of June. So with all this perspective, things are looking very rosy for the US dollar. So we are going to be looking at the chart to see how the market participants are going to be reacting to this recent development. Then let's go into what is going to be happening today, Thursday, February 29. So we are looking forward to a couple of high impactful events. The most important one today is the core PCE, which is what's it called again? The Core Personal Consumption Expenditure Price Index. And for those of you who do not know how important this is, well, this data here is considered to be an inflationary gauge, just like the CPI data we saw last week. And whatever comes in here will also tell us how sticky the inflation is. And of course, the Fed officials will be scrutinizing this data to guide their interest rate path for this year. Now, the core PCE measures the average change over time in prices paid by consumers for goods and services, which of course includes volatile foods and energy components. Now, the anticipation of this data influences market sentiment, of course, and it provides insight into the inflationary pressure and the potential trajectory of interest rates. Now, looking at the previous data for the month of December, you will see that for the year on year and the month on month, it came in at 2.9% and 0.2% respectively. And based on what is on ground right now, market participants, or let me say economists, are projecting a 2.8% and 0.4% respectively. That is for the year on year and the month on month. So for the month on month, it's quite clear that market participants are expecting something higher than the previous data. So we look forward to see what the actual data is going to be. A higher than expected figure definitely is going to influence price action positively in favor of the US dollar, while a lower than expected figure, or just as expected, will be inciting a bearish traction against the US dollar. So we look forward to see what the actual data is going to be on that one. Then another event we are going to be looking forward to today, which is coming up in about 4 to 5 hours from now, is the initial jobless claims, which is usually released by the US Department of Labor, and it measures the number of people filing for first-time claim for state unemployment insurance. Now, a larger than expected number indicates weakness in the US labor sector, which will definitely reflect negatively on the US economy and, of course, result in bearish traction against the US dollar. So, if we look at the figures and compare to what happened in the month of January, you will see that we have 201,000 for the month of January, while consensus are projecting a 210,000 for the month of February, which is not something promising at all. So we look forward to see what the actual data will be on that one too as well. Then besides these two events, we will be looking at the a couple of speeches from the United States Economic Docket. We have some federal officials who are going to be talking later today. And of course, we all know how influential their remarks are over the financial market, as it will buttress and provide us insight into the Fed's monetary policy stance, economic outlook, and potential future policy action. And of course, the anticipation of their speeches can significantly influence the behavioral pattern of market participants. So of course, we want to be saving the timing of when these events are going to be happening. As you all know, as technical traders, we obviously understand that the anticipation of this event has a way of influencing the character of market participant, which of course would reflect on the chart as price action. So what we are going to be doing today, as usual, is to run through the current market dynamics, looking out for patterns and structures that we can actually use to strategically position ourselves for the next move. So I encourage you to stay tuned in so you don't miss out on the valuable ideas we will be deliberating on today. And in fact, I can see a couple of comments right here. Well done to you guys. I see you from Ambuso Sierra. Good morning to you. Glad to have you around. So you said here, I hope you did not shout at the child because of the background noise. Okay, that's no problem. I had to sort out some, give them the necessary environments that they need. So that is what I had to do. All right, so thank you very much. I'll take that as a compliment. Torres Master, good morning to you. Thank you for being around. And sound of high quality, you have really thank you very much. Take that as a compliment too. Thank you very, very much. Elwine Franzman, good morning to you. Glad to have you around too with us too as well. And all right, so with that being said here, let's dive right into the business. So as usual, the first asset we will be taking on this morning is going to be the USOILSPOT. And on the USOILSPOT, we've done phenomenally well so far this week. Remember that we have been buying this asset since the new week began, as we saw beautiful trading setup, which of course we took advantage of, and since that moment we have been riding that bullish momentum all the way to the upside. And for the sake of those who missed out on our earlier sessions, let's quickly run through what really happened at the beginning of the week and what led to the decisions we made. And before I go into the details, I want to emphasize that I wouldn't be attending to the higher time frame. We already did a top-down analysis on this asset at the beginning of the week, and if in any way you missed out on that session, I have the link right in the description box below, so you can easily check them out after the live session to have a background knowledge of how we got to this point. So back into the business. So at the beginning of the week, we saw how price action was initially confined within the $76.50 level and the $75.87 area to emphasize the level of indecision going on in the market at that point in time. And you know how we do it when we have a range like this on our chart. We exercise patience due to the uncertainty and wait for signals in the form of either the breakdown of the support line for selling opportunities or the breakout of the resistance line for buying opportunities. Now, with the situation we had here, we begin to notice that despite the fact that price action was trading close to the support line of that range, we saw how it has become difficult for sellers to continue the momentum to the downside. And in fact, if you look at the nature and character of the week of those candles, you will see that price was finding it difficult to settle below that area. And to further buttress this, we saw a couple of AMA candles, which happened consecutively for about 3 hours to further buttress the strength of the buyers. We had the first one here, we had the second one, and of course we had the third one, all of which were supporting the idea that price may likely continue to the upside. Now, with this understanding in mind, I think an hour into the New York session, I quickly updated us on all my platforms that we will be capitalizing on the breakout of the $76.20 area, which of course happened about 2 hours into the New York session. And since that moment, we have been buying the USOILSPOT. We had another one at the breakout of the key level at the $76.50 area. We added another one at the $77 area, which of course we rode into the $77.75 level. And as at Tuesday's trading session, we had all our buy positions taken out with over 300 pips in profit. And on Tuesday, we decided to continue the uptrend. Remember, we had another one at the $77.32 level. We had another one at the breakout of the $77.75 area. And of course, yesterday we didn't have a session, but if you watch my price action tutorial analysis session, which I usually share about 30 minutes into the New York session, I did emphasize that we will be using this ascending trend line as a yardstick to guide our trading decisions for yesterday. And of course, you can see how the ascending trend line had played a major role in guiding this uptrend move we were enjoying since the beginning of the week. And as a result of that, we capitalized on this one. I personally had a sell position initially, which did not do well. I got stopped out of that one after seeing the breakdown of the ascending trend line, which I did take advantage of, but unfortunately it did not do well. And then we joined the bullish momentum, recouped the loss I made on that one, and rode the momentum all the way up, breaking out of the $78.50 level to welcome more buy position. And if you had moved your stop losses accordingly, like we usually do whenever price action moves significantly well in our favor, you must have been taken out of that buy position with a reasonable amount of profit. And for those of us who had capitalized on this profitable journey so far this week, well done and kudos to you. So as at this morning, while I was sharing my commentary on the USOILSPOT, we were not in any position on this asset, and in fact I was beginning to see some interesting trading setup come up using that ascending trend line as our yardstick to guide trading decisions. However, it is also important for us to take note of the various factors behind the scenes, which of course has been affecting the momentum on this asset, such as the Federal Reserve's decisions to postpone rate cuts, which of course coupled with the US oil stockpile, the escalation of the US stockpile, exerting additional pressure on the US oil in the last during the New York session and during the later part of the New York session yesterday and during the Asian session today. Now, the American Petroleum Institute reported a significant increase in US crude oil stock. We talked about this 2 days ago, rising by 7.168 million barrels to 8.428 million barrels. Now, yesterday the EIA also reported a higher than anticipated figure with a rise of 4.199 million barrels, and this of course is a sign that the supply is now higher than demand. If they can stockpile a huge number, it shows that the demand is not strong enough to eat into the supply. So this means that the supply is high, and we all know for our simple economics that when supply is high, price, due to the surplus of the commodity in the market, price tends to drop, and this is what we have been seeing in recent time on the US oil spot. Now, another concern is the regarding the interest rates remaining high for an extended period of time, and we all know how the crude oil is a US denominated asset, and whatever happens to the US dollar definitely affects the US oil spot. Now, concerns regarding economic growth and subsequent oil demand is going to be affected by this higher interest rate for an extended period of time. How is that? When interest rate is high, the dollar becomes the demand for dollar rises, making the value for the dollar rise. And when the value of dollar rises, what happens? Majority other currencies will find the dollar very expensive to buy the oil, and when this happens, the demand for oil drops. And because of these factors, we're beginning to see some retraction in that regard. We're going to be talking about that in a moment. Now, due to this recent development, market participants will be looking forward to the US Core Personal Consumption Expenditure, which is of course an inflationary data too as well, to give an insight into what the inflation status is in the United States, and of course we'll be giving the Feds a path to how they will be cutting the interest rate for this year. So now with this information here, let's look at the technical structure on the chart. And this morning, for those of you who are with me on both my TradingView and Telegram platform, you will be familiar with this update. So I identified this level here where we had price confined within this range between the $78.50 level and the $77.75 area since the later part of the New York session. And in fact, this led to the breakdown of this ascending trend line, as you will see here. And when price breaks down the ascending trend line, it's an obvious signal that sellers may likely be taking over this market. And as a result of this, I said this morning that we will be looking out for selling opportunities at the breakdown of the $77.75 area. And personally, I already have a sell position triggered at this point in time, and I do hope you capitalize on this one. So let's see how far this momentum is going to go. Now, with a sell position triggered here, we'll hold on to a bearish bias, looking out for more selling opportunities at the breakdown of the $77 area, and of course the breakdown of the $76.50 level to maximize the potential of this bearish move. And in fact, if price can go ahead to break down the lowest point for this week at the $75.87 area, we obviously want to be adding more sell positions to our existing trade. So at this point in time, and considering the fact that price has just broken down the ascending trend line, we maintain a bearish bias. But that does not necessarily mean that we cannot be taken out of the sell position. Obviously, you know how we do it in this community. We always try as much as possible to be on standby for whatever opportunity the market presents to us. Now, if it so happens that we get taken out of the sell position and price continues to find new highs, climbing back above the ascending trend line, then we will have to adopt the bullish idea again and continue that uptrend move. Now, for us to capitalize on buying opportunities, I would like to see price break out of the $78.50 level, and in fact by this time price action will be back above that ascending trend line, which has been supporting the bullish momentum since the beginning of the week. And of course, we can maximize this move by adding more at the breakout of that new level at the $79.25 level, which happens to be the highest level price action has been for this week. And if we can see a breakout of that structure, it will be a beautiful opportunity for us to maximize that bullish move. So it's a simple trading setup we have here on the US oil spot. So I encourage us all to mark out this level, and most importantly, mark out that ascending trend line, which is going to be playing a major role in guiding our trading decisions for today. So this is my simple view on the US oil spot. If you have any questions whatsoever, feel free to drop them in the comment section, or you need any further clarification whatsoever, let me know in the comment section. So with that being said, here we shall be I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So I see your comment here, Torres Master. You say here that how will you predict that a certain pair like gold, for example, will be likely to buy or sell based on the news, and what can someone get? Where can someone get live news? Well, all right. So where can one get live news? Let me say it. Okay, I usually watch Bloomberg. Right there on the TV behind me there. I usually watch Bloomberg, and on Bloomberg we get to get live news. And on Forbes too, I have a subscription with Forbes. They have a web, Forbes.com. They have a subscription with Forbes where you also get exclusive news too as well. Now let me address the issue of news. Now, we usually fall for the idea that news mean that it is a new development. Okay, that's the false idea we used to have. But in actual fact, the news is only telling you what has already happened. So if you are basing your trading decision on the news, then you're actually trading in the past. You want to be trading in the present and looking at the future. So you can see, if you look at my analysis is more of projecting into the future. So I almost place attention on the left hand side of my screen instead of the right hand side, which majority of traders used to do. Now, looking at the news is only looking at what has already happened in the past. I hope that is very, very clear. Now, if that is clear, then you will see that it doesn't make any sense to trade based on the news. Now, the only reason why I look at the news is to see why the dollar or why an asset had behaved the way it has behaved. So that is why I listen to the news, just to look at, oh, what is the reason why this asset moved like this at this particular period of time? Then I get an idea of that. But mind you, I'm already in that trade. Now, if you have been following us for a while, which of course I know, and you have been attentive with what we are doing, you will realize that what we do during the Forex Morning Mastery is to strategically position ourselves for the next move, which we do not know when it's going to happen. So we try as much as possible to be on standby for buy positions and as well sell positions. So whenever it happens, we are already in the trade. And when we look at the news, we only look at the news to see the reason why the asset had moved in that particular way, so that we can use that information to guide our upcoming trading decision, and of course see how we can maximize the potential of that opportunity we are taking. So I hope I made myself clear on that one, Torres Master. If you still have further clarifications, feel free to let me know in the comment section. So with that being said, here we will be with no further questions. Of course, I will take that as a confirmation that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. All right, so the next asset we are going to be looking at this morning is going to be the GBP USD. And what an interesting situation we have on the GBP USD. As you will see, price action continues to oscillate within the supply window we identified yesterday since the New York session. And of course, this has further incited an uncertainty in this market at this point in time. And though we didn't have our Forex Morning Mastery session yesterday, but I did give an update. And of course, if you had watched my price action tutorial session, you will see that we did identify an area where we could probably see potential selling opportunity. And of course, the renewed demand for the US dollar ahead of today's personal consumption expenditure price index is also in play right now. And I'm of the opinion, and remember the various factors I did emphasize earlier, coupled with the speeches from the Fed official through the course of this week, the narrative supports favors the US dollar, and I'm looking out for potentials that sellers could come in this particular market. So we have a sell window at that point in time. Now, this recent consolidation suggests that bears are waiting for cues from the release of this US macroeconomic data before initiating any fresh directional position at this point. And if we consider the expectation that the Federal Reserve will maintain higher interest rate for an extended period of time due to the persistent inflation and resilient US economy, it will make quite a lot of sense that we look out for selling opportunities at this point in time. Besides this, it is also the global risk sentiment at this point is also supporting any bullish idea at this point. Now, on Tuesday, we heard from the Bank of England Deputy Governor. What's his name again? I've forgotten his name again. So we had him talk on Tuesday, where he emphasized that the Bank of England is not ready to cut interest rate anytime soon. And of course, this is an hawkish remark, which is supposed to support the strength of the pound sterling. But you know how resilient the U.S. economy is. This statement has not really affected this asset. So moving ahead, how do we intend to capitalize on the next move? Now remember that we had the situation on Tuesday. Remember, if you are with us during the live session on Tuesday, we had this beautiful ascending trend line, which we said we will be using to guide our decisions for Tuesday's trading session. And in addition to the ascending trend line was the fact that that area between the 1.2700 level and the 1.269 had continued to become a strong barrier for buyers in this market. As you will see, every attempt by the buyers to break out of the structure has always been met with strong resistance from the sellers. And due to this persistent selling pressure, we did agree here on Tuesday that we will be selling the breakdown of that ascending trend line, and to position ourselves for that move that we are looking at the breakdown of the 1.26830 level, which of course got triggered later on Tuesday, and then right into the Asian session we saw a gathering of momentum, and of course with multiple entries at the 1.267 and the 1.26565, and of course our key level at the 1.265. We had about 4 sell positions on that particular move, and that gave us some significant amount of profit before the bullish momentum came in. And during my analysis during the price action tutorial yesterday, if you had watched that video, I did emphasize that this bullish momentum we're seeing so far may likely be a retracement of that bearish move that started on Tuesday. And the question as at yesterday was that how far will this bullish moment, this retracement phase go before the second leg of the bearish momentum will happen. So this was one of the considerations we were looking at during our live session yesterday. And we also buttressed that if price action goes ahead to break down that descending trend line we identified on the daily time frame, this descending trend line right here, that is where it's very important for you to watch my top-down analysis on the GBP USD, which I shared during the weekend. If you had not watched that video, please go ahead and check the link right in the description box below and watch that video to see how important that descending trend line is. In fact, that descending trend line has been supporting bearish momentum in the last 7 months now, I think 7-8 months. So it's a very, very crucial one. Now, the only condition that would make me buy the GBP USD is for price action to break out of that descending trend line. Then at that point, if price can break out and retest where we see continued buy pressure, we would want to be on the verge of joining any bullish momentum, and a further breakout of the 1.26 830 level and the 1.2700 area will definitely welcome more buy positions in this market. So as at this morning, we had a sell position triggered right here, had the breakdown of the 1.26565. Remember, if you are with me on both my TradingView and Telegram platform, I did update it that we are looking out for selling opportunities since price action remains within that sell window, with the hopes of joining more at the breakdown of the 1.265 and the 1.26220 area. Now, with the sell position triggered at this point, we currently have this position running in a loss of about 13 pips thereabout. So we're still of the opinion that sellers could come in, but ensure you have enough breathing space for price action to move around. So I will be suggesting that anywhere around the 1.26750 area and the 1.26790 or 2680 area seems most appropriate to have your stop losses at, as this will give enough breathing space for price action to move around. So that will be dovetailing to about 20 to 25 pips stop loss on this current sell position. So let's see how the market is going to play out around this area. The fact that price still remains below that descending trend line still opens up the bearish idea in this market. So let's see how it plays out, and if we get stopped out, it's okay. And let's see if price will break out of the descending trend line. If it does, then we want to prepare for buying opportunities. But if price breaks out of that descending trend line, please note that we are not jumping in right away, as we will be waiting for confirmations to happen, like a retest of structure, before we jump into that sell position, into that buy position. So please, let's have this in mind. So at this point in time, we still maintain a bearish bias. Price, due to some couple of factors here, price remains below the descending trend line we identified on the daily time frame, and we are waiting for the end of the retracement phase of the bearish momentum that started on Tuesday. And the third factor, which is the most important one, is the fact that all fundamentals support a strength in the US dollar, and we're looking forward to see that happen here in the form of a bearish momentum. So I will definitely be giving you updates as at when due on both my TradingView and Telegram platform, if anything new happens on this market structure. So this is my simple view on this asset. If you have any questions, feel free to let me know in the comment section, and I will be taking the next 5-10 seconds off to see if there are any questions whatsoever before we move on to the final asset on our watch list. And I encourage you to mark out these levels on your chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So I see a comment here from Torres Master. You said here that when news time click, you find some turbulence at that particular moment. What is the reason behind that? Well, of course, there is always indecision going on as market participants digest the information that they just received, and this may likely lead to some choppy market conditions during that time, during that period. And of course, this is not something you want to be worrying yourself about. You see, too much thinking makes your trading very complicated. So when you start thinking too much, you want to know the reason why this and this and this happens. It usually complicates everything, and this leads to over analysis, and this could lead to a situation where you don't even know what decisions you want to be making. So that is why I try as much as possible to simplify things. We don't want to think of too much things. Just mark out your levels and identify them. If this level is telling you to sell around that area, you sell, close your chart, and come back and see how price has behaved after a couple of hours after the news. So I always advise not to overthink things through, know the reasons why things are happening around a particular area, because the fact is you can never know. But one thing we know is, okay, there is an indecision going on around that area, and obviously you just want to, we understand that that will often happen. So all we just want to do is mark out the levels, and what is your levels telling you? Is your level telling you to sell at that point in time, irrespective of what happened around that area? Then you sell. And if your level is telling you to buy, irrespective of what happens around that area, then you buy. And it's only when you have a consolidative market structure that you may want to be not sure to take a position at that point in time. And usually in this kind of situation, you want to wait for significant confirmations before jumping into any positions there. So I hope I answered your question there, Torres Master. Now I see Rex Vagara's comment here. Good morning, Rex. Trust you're doing very well. And you say here that I sold at 1.26564. I'm currently draw down 12 pips. Do I close? What do you think, sir? So it's almost the same thing with what Torres Master said here. Now you're overthinking the whole situation. Since you already have your sell-stop order triggered and you have your stop loss in place, so why are you considering closing it again? So it shows that when you think like this, you get exhausted easily. And when the market actually makes that move, you are too tired to take that move because you're already exhausted and you're not even sure if that move is going to go through. So usually when you have your position in place, leave it alone. Your stop loss is in place, and I do hope you have a well-defined risk management strategy in place and you are not risking more than your emotions can handle. If that is the case, then why are you looking at the chart? Your position has triggered. Let the trade run, and if it's a loss, it's a loss, and if it's a profit, it's a profit. So that is my simple view on that one, Rex Vagara. I hope I answered your question on that one. I also have a sell stop order triggered as well, and it's still running. It's in a loss at the moment, and we have no other choice than to allow the trade to run and mature. Okay. So in the absence of no further questions, I'm of the opinion that we are all on the same page, and that we can actually move on to the next and final asset on our watch list. So stay tuned in. So the next asset we are going to be looking at this morning is my favorite asset, of course, and that is the XAUUSD, popularly known as the gold spot. And the last 24 hours we've been doing pretty well. As for those of you who are part of the XAUUSD live window yesterday, We currently have 3 active buy positions running with over 120 pips thereabout in profit at this point in time. And for those of us who capitalized on this opportunity, well done and kudos to you for being on standby. And at this point, if you saw my commentary this morning on both my TradingView and Telegram platform, I did emphasize that it is pertinent that we move all our stop losses accordingly to secure this current buy position, as we are within a strong selling niche in this market, as anything could happen. And in fact, if we consider the fundamentals as regarding the US dollar, everything is supporting a growth in the US dollar, and I'm of the opinion that the current bullish traction we're seeing here on the gold is as a result of a couple of factors, which includes the geopolitical tensions in the Middle East, which usually favor safe haven assets such as the gold, and of course the uncertainty regarding the timeline of the Fed's interest rate cut decisions. And as a result of this, market participants will obviously be looking forward to the core PCE, which I did mention earlier is considered to be an inflationary data, which of course will be giving us an insight to how sticky the inflation in the United States is. And the Fed, of course, will also be looking forward to what the data will be to help them shape and guide their easing monetary policy for the year 2024. So at the point in time we are right now, the spotlight is on the US core PCE, as it's going to be significantly influencing the US dollar dynamics, and I have a strong feeling that price is going to be dropping significantly to the downside for the later part of this week. But I'm not saying that we should just sell right away. Of course not. We usually look for structures to guide our trading decision as well, and we will be deliberating on that in a moment. So with this latest development, please, if you're still in a buy position right now, kindly move all your stop losses to secure this position. And I'm of the opinion that anywhere around the third entry makes quite a lot of sense for us to move our stop losses, so that the worst case scenario for the third position will be at break even. Then we close the other 2 position with a reasonable size of profit. So with a well secured position at this juncture, what is going to be our plans for today, and how do we intend to capitalize on the next move? Remember, since the beginning of the week, the market has been very, very choppy. As you will see, the first couple of days of the week, price action was ranging. Remember, we did identify this range that is between the $2,035 and the $2,030 level. In fact, it's a $5 range, and we saw through the course of the week the range expanded into the $2,040 and of course the $2,025 area, which happens to be our key level for this week. Now, it's a very choppy market conditions, as this of course is emphasizing the prevailing uncertainty in this market. And whenever we have this kind of prevalence in uncertainty in the market, we have no other choice than to exercise patience and look for significant signals before jumping into any position. And in fact, if you are a long-term trader, the only way you want to be taking the position is for price action to either break out of the resistance of this range at the $2,040 level for buying opportunity, or the breakdown of that key level at the $2,025 area for selling opportunity. However, since the week has begun, we are yet to see any significance in that in both direction. However, due to the variety of traders we have on this platform, we usually take into consideration short-term and long-term trading opportunities. And in terms of short-term trading opportunities, on Tuesday, remember, we did identify this descending trend line after capturing the series of lower highs since Tuesday's trading session. And of course, we did emphasize how important this trend line is, as it will be playing a major role in guiding our trading decisions. And you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we obviously want to be looking out for patterns and structures that support the idea of selling. And the only condition that will make us buy is for price to break out of that descending trend line. And this was how we capitalized on that bullish opportunity yesterday. For those of you who were with us on the XAUUSD live window, you were able to capitalize on this one as we position ourselves at the breakout of the $2,030 area. Then we added more positions at the breakout of the $2,033.50 level and the $2,035 area to maximize the potential of that bullish move. And once again, well done to everyone who capitalized on that one. So as it is right now, what is going to be our plans for today? How do we intend to capitalize on the next move? Now, to do this, I was able to identify an ascending trend line, which is going to be playing a major role in guiding our decisions for today. So what I did here was to connect the series of higher lows since Wednesday's trading session, and obviously if price remains floating above this ascending trend line, we will be thinking of buying this asset, and the only condition that will make us sell is for this ascending trend line to be broken to the downside. Now remember that I emphasized in my previous videos that the $2,040 area has been a strong selling niche, and in fact we went to as far back as about 6 months if you watch my video on the higher time frame. And look at what happened here on Friday. Selling niche, you can see more of a selling niche. You can see here we saw what happened here on Tuesday, and in the last 48 hours this area had continued to be a selling niche. And look at what happened here today during the Asian session. Despite the bullish momentum we capitalized on yesterday, price getting into that area, the traction in the bullish momentum gradually reduced. Now, due to the fact that we are within a selling niche, I emphasize that we move all stop losses, secure this position, as we may likely see price drop to the downside. And following my gut feelings, I still strongly feel that price will drop significantly to the downside, considering the fundamental factors we talked about earlier. Now, with the situation we have here, and using this newly identified ascending trend line, a breakdown is already happening right now, though we can't say this is a breakdown yet, as this candle still has about 37 minutes to close. So if price truly breaks down this ascending trend line, in fact I'm looking out for selling opportunities at the breakdown of that $2,035 area. And if price continues to drop, we'll continue to add more sell positions using these levels as a yardstick to maximize the potential of this bearish move. So I strongly believe in a bearish momentum this week, for the later part of this week. I don't know why. We talked about the factors earlier, so let's see how far this momentum is going to go. And obviously I will be giving you update on both my TradingView and Telegram platform. And if we are going to be adding more buy positions to our existing trade here, the only condition that will make me add more buy position at this juncture is for the $2,040 level to be broken to the upside. In fact, a breakout of the $2,040 area would have taken out all the sell positions within the zone and then welcome buying opportunities for us, which I doubt if it will happen at all today. Because if you look at the last time price tested this on Friday and look at the subsequent attempt by buyers, you will see that price is not even close to that 2040, which for me is a sign of diminishing bullish pressure in this market. So let's see how the market will play out going forward. Trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give you update as at when due. If you have any questions whatsoever, feel free to let me know right in the comment section, or you need some further clarifications, let me know. Trust me, I'm here and willing to be of help in that regard. And if you haven't clicked on the like button, please, this is the easiest and cheapest way you can actually support this community to grow, and your likes are very valuable to me, and if it in fact helps the algorithm to promote the video to a wider audience of traders who may find this content beneficial to them. So far we have over 11 people on board, and the current likes we have here is only 6. It doesn't take your time at all. Just click on that like button, and thank you very much as you do so. So with that being said, here I will be taking the next 10 to 15 seconds off to see if there are any questions before we start rounding off on today's Forex Morning Mastery session. Alright, so I see your comment there, Elwin. France, man, please let me know if I'm pronouncing that name correctly. Elwin, or is it all Elwine? Please let me know. Thank you for the compliment. I really appreciate it, and I'm very glad you found this analytical approach useful and beneficial to you. And Rex Vagara, you're very much welcome. And Torres Master says, what happened to USDJPY? I think we could also well, like I told you, I've emphasized this countless of times during this session, that I can only take 3 assets for the Forex Morning Mastery due to the limited time I have. In fact, in about 30 minutes from now, I'm having a session again, and I need to get prepared for that particular session. So I can't take more than 3 assets for the Forex Morning Mastery, except if we are working together behind the scenes. Then, to answer your question, what happened to USDJPY? Well, I during the course of the last couple of weeks, I've been seeing comments in the comment section as majority were wanting us to include the GBP USD into our watch list, and due to the prevailing uncertainty in the USDJPY, where there is the fear of the timing of when the Bank of Japan will be intervening in the market, leading to the choppy market conditions, I decided that okay, fine, let me make it fair. I posted out a poll on my TradingView and YouTube channel that you should choose which asset we should take for this week between the USDJPY and the GBP USD, and the poll came out positively in favor of the GBP USD. So lo and behold, that is why we have the GBP USD for this week. So I hope I answered your question, Torres Master. All right, thank you very much, Elwayne. I'm glad I pronounced that correctly. So it's on this note we have come to the end of today's Forex Morning Mastery. I'm yet to see your likes, guys. I want to see the like tally with the number of people watching this live session. Please, I look forward to you clicking on that like button, and thank you very much. It means a lot to me, and it means a lot in helping this community to grow. So with that being said, here we have come to the end of today's session, and so far we were able to attend to 3 of the assets on our watch list for this week, which includes the USOILSPOT. We also attended to the GBP USD, and of course we attended to the XAUUSD, all of which we were able to identify simple trading setup using our basic tools such as the trend lines, key levels, and chart patterns only to strategically position ourselves for the next move. And I do hope you marked out these levels on your chart. If you had done so, well done and kudos to you. So all we just need to do right now is exercise patience and allow the structure to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you want to ensure you have a well-defined risk management strategy in place to ensure you mitigate against any risk on your portfolio. For those of you who are joining us for the first time, I do hope you are able to get 1 or 2 things from what we discussed here today. If you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 9:05 a.m. West African time, 10:05 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare for tomorrow's trading session, which promises to be another exciting one, as we shall be looking forward to market participants rounding up their trading activity for the week and the beginning of the new month. We could likely see some beautiful traction to capitalize on. So be part of the session so that we can map out a roadmap for tomorrow's trading session. So I look forward to seeing you guys tomorrow as always. So it's on this note, I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.